As many of us Tesla bulls have been saying, once Tesla stock starts to run, it will run big. The 22% jump today is the best trading day in the last decade. The amazing update by Tesla this week likely marks the inflection point and the beginning of the Great Repricing. Tesla is now a new company. Every single thing about it has been raised a level, with 4 executives getting major promotions, Tesla's manufacturing ability, the machine that builds the machine now coming into view, the AI progress, Robotaxi now closer to reality, and stronger financials. This is just the beginning. So we've got the bulls here with us today. I'm Herbert Ong.
I'm Alexandra.
I'm Xander Sky.
And I'm Jeff Lutz.
All right, let's go. So today was a big day. We saw the stock jump big time. We're going to review this new book that Tesla's now writing. We're going to talk about every new chapter, every new page that's in the book. Let me just ask the question, what of the announcement that you heard, 15, I've got a list of 15 of them, was the most important one that you thought was most critical? Do you want to start first, Jeff?
Yeah, I think the real world AI data that they went through, this is the first time Tesla went through actual data points in arrears on, basically the last, call it 10 or so months since they went end to end on, version 12 and how that's performed in terms of relative performance. They have the fleet data. They have all of the data. They're not these small little on the side trackers, they have the full data set. And so they went through the data in arrears. It basically said there's 3 orders of magnitude improvement, including where they envision V13 landing. Even if you take that out, it's significant. So now it looks like the AI data can be graphed along or following scaling laws. And now if you look at the data in the past, there's potentially a way now to plot its improvement trend in the future. And this is what I believe analysts should be keen on. They should be studying. There's nobody even close to this in terms of the amount of miles, the amount of improvement, and the quality of this data, and it's continuing to build and grow. So for me, that was, again, as this transitioning to an AI company, this was one of the biggest announcements. And there's, like you said, there's 10 other ones too.
The company and the product. I don't look at the quarterly stock movement.
A very realistic bull, questioning certain decisions.
The rational bull. They enjoy listening to bears.
We're looking for the red flags. You're supposed to react.
Yeah, Jeff is completely right. Actually, what bothers me the most is, other than these little details, we actually knew all that. And why in the world is Wall Street only waking up today? I can completely see that they appreciate the increase in auto margin. But even that was partly foreseeable. We had last quarter, I don't remember the number, I think it was 583 million exceptional costs for layoffs, right, in the second quarter. So if you factored those back in, you knew that we were already on a good strike of getting cost of goods sold down. And obviously Jeff has always been very vocal about that. So I just feel like we knew all that. That's why we've been patient the last 2.5 years. It's coming to fruition. We're getting clearly a step closer. We're seeing now real world results of this, but nothing was really to the point new to get all this excitement. So it frustrates me a little bit that they needed to have this earnings call to get it. And I'm the first one to say I didn't expect anything from this earnings call. If you recall, I actually asked that Elon didn't have to come to this one and just let the team do it. I mean, my gosh, what a mistake that would have been. But nobody really expected something so coherent and coming together from all sides. Energy, cars, AI, it's all coming together. And this was the call. Wonderful.
Okay. Xander?
Yeah, for me, it was really about the forward guidance that we received. That was the bullish thing that portfolio managers needed to see, but also the EBITDA. The EBITDA was so strong, and they didn't have those costs of restructuring, so that really helped with the numbers. And it was just such a big surprise with the amount of cash that they generated. And if this is the worst of it, I think that we're, the thesis is playing out exactly how you'd hope. And then, this 10-10 event was, if I was a portfolio manager, I'd look at 10-10, I'd note it, and I'd say, okay, let me see the numbers. If the numbers come in juicy, then I would talk to whoever's in charge to deploy capital. But I'm just spitballing here, but that's how I would think.
Okay. And then for me, I mean, I wrote down 15 of the, I think, what are the major announcements. And I'm going to cheat a little bit. I'm going to tell you it's two things, right? The first thing is going to be that it is about right-sizing the financials for the auto business, because only once you have that in place, talking about the more affordable models coming in, the 20 to 30% vehicle growth next year, that's when people will start believing and about the Robotaxi. And here, that's a second point. They were very, very specific. They are already testing ride hailing in California, Palo Alto City. Talking about, we'll dive deeper into that later. But they were basically saying there's going to be a paid ride sharing Tesla network that's already in operation for employees, and that they're going to have human level driving by Q2. Jeff, I do have that chart that I can show later, talking about what you're saying there. So that is a big deal. Do you guys agree then that this is a brand new book that we're talking about? Let's go back to the stock here. The stock had its second best trading day in the last decade, the second best ever. 2013, we saw it close at $4.63, went up almost $1, and that was considered a 24% change. Now at this price point, it went up by 22%. What is it now? $850 billion market cap now. So it's much harder for something like this to happen. But when a stock like this happens and it jumps this big, it means, right? Sometimes, usually, it's not just this, normal trading day. This means it's kind of being revalued at some point. We also saw many Wall Street analysts. Of course, I think most of these are just, lemmings. They just need to raise it up because the price jumped. They need to, do that. So nothing here, I think, is interesting. The most is still Wedbush at 300, Piper Sandler 310. When you see things like JP Morgan 130, okay, maybe they're 135 now. Wells Fargo 120, maybe they're 125 now. What do you guys think about that?
Yeah, sheep, like always. Sheep. I mean, it's actually embarrassing, right, to increase by $5 when you see these movements. And to still be at those low levels. I mean, what was it? Wells Fargo from 125 to 130. It's incredible when you are at 260. So that means they think the stock will halve in the next 6 to 12 months. So it's embarrassing, and I think that's a point I want to make anyway for the stock. The stock market is a sheep's market, right? They all follow. There are people that are going to jump on this stock now because they've seen the 22%. And I think that will finally carry us over this hard ceiling that we're having now for 2.5 years of about 260, 270. And I think this movement in the next couple of days of people, pouring new money into it, not wanting to be left out. There is still the reservation that the elections on November 5th will have an impact on Tesla, because Tesla has become a Trump stock, whether you like it or you don't. And so there may be people who wait for after the elections. This is now less than 2 weeks to go. And I do believe we have the potential to go up to 300 now. And I just want to add one of my personal episodes, but 2 years ago when that leap opened, I bought some, and lots of people know that because some have followed me and know about this. I bought some, and quite a significant number of January 2025 calls at 300, at a strike of 300. And I didn't touch them. And I cannot tell you how many times I looked at them with tears in my eyes. I bought them around 33 or 35. I don't recall because it was painful to watch them. So anyway, yesterday morning before the earnings call, they were down to 3. So I'd lost from 33 down to $3. And I looked at them and I thought, well, now it's too late to sell anyway. May as well stick it out. This morning, they're back. This afternoon, they're back at 13. And I'm determined to carry them over to the new year. We'll see whether I'll actually change them into stock or whether I will just sell them. But it shows you what determination those few well, actually not so few, all in TESLA investors have. I'm not an option trader, and I didn't buy any other options after that one. But we're sticking to this because we believe it. And while this was a gamble, I think all options are a gamble. I'm sorry, Xander, you're gonna tell me that I'm not right, but for me it is a gamble. So even with a gamble, we were prepared to stick it out against all odds, and that makes me sentimental, because it's been a tough 2.5 years. I mean, how many times we've been sitting here, our weekly Cyber Bulls meeting, and explaining that it's all okay at 100. You can still buy it. This is still a great company. This will still go up again. And then every time it went back down, or every time it was difficult to understand what the stock price was doing, we fought it through, and we really deserve this. We really deserve that this is finally going to break the 260, 270 level and go back up.
Go for it, Jeff.
I was so enthralled in that conversation that I forgot the question.
Me too.
There's
That's
no
why I said
question.
go for
We
it.
are now talking about the great repricing, but she's sharing her story of what happened. And I sure remember when the stock fell from $420 to $100. Those were the days. We were having those conversations weekly. And then I was just telling Alexandra, it's not just the fall. It's this thing for 2+ years. We kept saying, no, the stock is undervalued. The company is doing great. And everybody's pointing and saying, no, you're wrong. Take a look at the stock. Not that, well, I guess one of the questions we want to ask you is this really a new level set? Do we feel that way? I would argue that we can. And we're going to go through each of the parts of the business, I think, that have all improved to the point now that it's hard to say this is just a blip.
I think what
congrats
Tesla
to
did,
the bulls to stick it out.
Oh.
Yeah. Go ahead.
Yeah, no, absolutely. I think what Tesla did is they put a floor under the stock, and they casted out a bridge to the new company that we've been talking about. And the floor is in the form of the performance of the company, the supply chain, the COGS, the engineering, those teams working together, and to get all the vehicles down to record COGS, to take a Cybertruck in 3 quarters and get it to positive gross margin, what other companies building EV trucks have never done in 3 years of production. Tesla did in 3 quarters. So it's showing you this relative, not only absolute, but relative capability of the company. But getting back to the absolutes, obviously the surprise in gross margin, several hundred basis points of a surprise. The sources of revenue are growing. It's almost comical to me. It seems like the analysts are starting to bifurcate, and there's the dinosaur camp who wants to show you the revenue and show you the gross margins minus everything that Tesla's actually building their company for, like software as a service and those revenues. They want to claw that out. Oh no, but this is actually the billions of dollars they're investing in network infrastructure and in the top talent AI engineering resources. It's starting to bear significant fruit. And I'll remind you that the folks that want to report on earnings and revenue minus ZEV credits, that ZEV credits have been there 44 quarters in a row. So it's not a one-time thing. It's a 44-time thing. And it's bizarre to even do that, because the reason that they're getting those ZEV credits is a function of the inability of the rest of the industry to be able to produce EVs at scale profitably. So they've pulled back, and they have to pay these ZEV credits back to Tesla. And we'll talk more about that later. But I just find it comical that after 44 quarters in a row of receiving them, that that's the conversation of, well, let's split it out. Let's split out FSD revenue. But again, I think what Tesla did is they put a floor under the company, and then they really honestly they built a bridge to the new company, which is they started going through that real world AI data I spoke about. They started going through the Cybercab. They gave you insights into the next vehicles, the volumes for next year. This was incredibly this earnings call was incredibly revealing. It was basically everything. I don't know why people were expecting this, by the way, in the Robot event. The Robot event was futuristic capability. This is what we're building for the long term. It was not a product announcement that you're going to be able to order this product and take delivery here imminently. The products you are going to be able to order and take delivery of, that will happen, in the part of next year. And Tesla told you that there's multiple vehicles that will be for sale that are new vehicles, and what great timing for that. So really, I go back to the floor under the stock, bridge to the new company. This is an AI company. They're showing you it's an AI company. They showed you the data in arrears. They kept to their releases in September. They're building credibility. They have a big release coming up in October, and then they've got some big milestones for the following year. And again, if you look at the performance of that supply chain, of the engineering team and the cogs, this is something that is not easy to replicate. This is not something you go out and cut and paste and bring into your company. This is many years of work. This is an approach to how they work together, and it's a process, and it's the way they work, and it's in their culture. So it's going to be a difficult thing for other companies to pull off. But anyway, that's
hence actually, if I can jump in there, hence actually why they deserve the ZEV credit, right? All the other OEMs who are paying the ZEV credits, they cannot build profitably and prefer, like Jeff explained, to not do it and pay this penalty rather to Tesla than to the government. But you can show the chart, maybe, Herbert, that I set up this morning. Exactly. So over the last 13 years, Tesla has now accumulated nearly $11 billion. Now, you have to understand, this is $11 billion that are just pouring in. Obviously, you have to have the whole business that is set up for it, but you don't have to spend another dime on building anything or whatever. This is just pouring in. And no, these are not government subsidies. I hate it when people play ignorant, because they know darn well what it is. The Laura Kolotnys and the CNBCs of this world, they know darn well what ZEV credits are. But they prefer stipulating that they are on taxpayer dime. They are not at all on taxpayer dime. The way this is set up is that all car makers have to have a certain number of zero emission vehicles, ZEV, that's what it stands for. And if they're not, there is a penalty. And this penalty can either be paid to the government or can be negotiated to be offset by others who have their quota and have a surplus of quota and can therefore trade it. And that's what Tesla is doing. $11 billion. How many factories does that build? At least 2, if not close to 3 factories, making it even more profitable to build more zero emission vehicles to get even more ZEV credits. And you would have thought that over the last 13 years, because that chart is 13 years, they would have learned. And instead of it, and that's why I set it up like that, it just grows. And the top line is only 9 months within 2024. So 2024 is going to be much bigger than every other year before that. So it's just, it drives me crazy when I read those headlines. That's what they're trying to run with. They have a couple of bullet points. The first one from Dana Hull, who knows darn well that this is not the point to carry home, was that, the Elon said it would be pointless to build cars that are not autonomous. Hello, what century are you living in? This is what Tesla has been preaching for decades, and you're not discovering today that they will never build a car who could not be autonomous. That's the whole model. So the way the press today tried to diminish this, and obviously a good thing the stock market wasn't impressed by them, but the way they set it up was, close to slander. Going now to Xander. Sorry about that.
I wasn't paying any attention to what they were saying at all. So I'll tell you guys a little story. That, you mentioned the 2.5 years of pain. I had that response. Maybe it was the couple of gins at the Robotaxi day, but I actually teared up with thinking about how, I spent probably about 5,000 plus hours of research across the 5 years, if not more, just studying the company, making sure that I made the right decision with selling my houses and putting into Tesla and buying Teslas and all of that. And it just, when I saw the Robotaxi, and then that was okay. I was expecting that. When I saw those robots dancing, I lost it, and I was recording a video for my children just so they can hear my words and reaction. And it's one of these things where you have a thesis and you make an investment, and at the end of the day, it's about that, right? You're making an investment in a company, you're becoming a part owner. So, all of this talk about ZEV credits, it's 100% gross margins. That's free money. So why do we spend any time thinking about it? I immediately, once I saw the earnings, talked about how the adjusted EBITDA of 18.5% returned to what it used to be at Q2 2023 levels at 18.7%. And so, this is a year plus erased in the most difficult environment possible, with having to do incentives, having to do a whole bunch of things to get that revenue. And when I started my business, I didn't have an accountant, I didn't have a bookkeeper. All I cared about was how much cash is coming into the bank. And so now we saw them go from 6 billion, and then they had what was it, three and change in capital expenditures, right? All those chips and all that cooling that's necessary. Thank you, all the competitors with those ZEV credits. This is just incredible. You're 223% year over year cash for the quarter, and so now $33 billion. Now I know they're going to say, oh, some of it is income that's coming in, right? It's a liability, and they have cash, that it's not actually 33 billion in the bank because they spent money. But all of that is just fancy accounting. And when you look at it, what's happening? There are no sellers. Who is going to sell here at 250? You didn't see any dip, and then we closed at 260. So I just think that it's not quite time to go and throw those short-term darts just yet. But as Alexandra mentioned, once the election is over, if you're waiting to deploy, that I see as the last hurdle before one feels comfortable, to start messing with those long-term leaps that Alexandra is scarred by. But lastly, I think it's important to look at where you were right, look at where you were wrong. Selling covered calls was obviously not a good idea for the bulls here, but selling puts paid very handsomely today. So I think that the options are powerful, and there's a way to not be the gambler in the casino and be the casino, and plan for these types of events where everyone is saying that it's downside, but I had a buddy say 1%, and I think that's crazy. We have to expect the unexpected, and now the runway is completely clear in terms of Tesla's execution. I just don't see all of this political talk. I don't agree with any of it. I think really it's just look at the execution of the business, look at the vehicles that they're going to, and everyone's like, oh, am I getting the 25K car with the steering wheel? Even the way the question was formed, they're all robotaxis. But you either believe that or you don't, and I've believed it the whole time. So I think we're in good shape.
Perfect transition. Thank you so much, Xander. So this is our topic for today. It's I still want to stay with this, continue this conversation of what you just started there with the stock in the near term and the stock in the near middle term in the future. The great repricing, as Justin from Lord Perdifalaco refers to. When will Tesla get to the great repricing? So we just covered key announcement, right? Which of these things we've heard in the recent days was, in your mind, the most important announcement? There's so many. I think that's one point. Then I want to continue the conversation, the great repricing, and then we'll dive deeper into the Robotaxi plans, which they finally shared so much detailed information as far as I was concerned in yesterday's at the earnings call. And then what is Tesla's main product? And Jeff would know. It's the factory. And we're going to dive deeper into that, the machine that builds the machine. So the great repricing, one of the reasons why it could even be in a conversation today is because Tesla first needed to show that gross margins were not only kind of like, instead of it, stop the free fall of the margins, and then now it's actually growing again. So this chart beautifully shows the auto business is in blue, the energy business is in red, and then the services in yellow. And the blue, you saw the drop in 22, and that's why once that it fell this long, that's why people would not buy into the story stock of Tesla, the growth story of Tesla, until they see the auto business recovering. And you can see here that's going back up again. But it's the surprise of the energy, now a 30% gross margin, and then services popping up. And boy, this is promising eventually to be even higher than the other two in the future. And this is a great table to document what's been happening with cost of goods. If they can reduce the cost to build Model 3, Model Ys in our cars, look at that drop. This spiked because of the inflation and the supply chain disruptions. Now we're back to, this is the record low of 32,000. So let's start with that, guys. So with fundamentals, right? The financials have just not only right-sided, but it's like strong. $33 billion in cash, over about $3 billion of free cash flow. They had reduced their operating expenses and yet achieved all these great kind of wins across the board. Their financials are pretty strong. Why don't we start with you, Alexandra? I got so many questions. I don't know which one I want to ask, honestly. Let's start with just pricing. What is your thinking about stock price in the next year? And then when will the great repricing happen for Tesla? 25, 26? When will that happen?
I mean, I will repeat what I've said for a long, long time. I think 2026 is going to be a major year in terms of stock price evolution, just because that the guys that are needing a spreadsheet will have finally enough numbers to get there. But before the end of the year, I'm very confident for $300. I just think that people are starting to finally understand what this is all about, and the short-term oriented people at least have a couple of key numbers now they can focus on. Doesn't bring us to 500, but brings us to 300. What will bring us to 500 and more than that in 2026, in my view, is that by then the 3 new models will be out. The Cybercab, remember, will be built in volume. It's not just a product launch. It will be built in volume. The California and Texas unsupervised FSD will be operating. There will be a public, not just an employee, hail app available. So all these things will be profitable and real contributors to the stock price in 2026. So I still think that Tesla is a stock to hold long term, like much longer than that, because everything will just go in the right direction, not every single day, but over long term. But I think for people that now have a 2-year window, it is worth getting in. I usually always say to people, don't get into stock below a 3 to 5 year window, but I think now people can actually reasonably believe that, because at the same time, you will see interest rates coming down. You will see so many other factors that have been critical to Tesla improving. Now, obviously, nobody has a clue whether supply chains may not have, issues again. Wars can happen, whatever else can happen. I'm not talking about that. I'm just talking about factors that Tesla can influence. And from those, I see a very bright future in 2026 now.
Okay. And then, Jeff, what's your answer to what do you expect for the rest of the year? And then when do you expect the great repricing for Tesla stock to happen, when finally it's seen like an AI company, a robotaxi company, a bot company, whichever you want to choose?
Yeah, it's going to be when we least expect it is my answer. And Alexander's right. There's potentially moments in time of greater certainty, but I actually think it's going to be when we least expect it. And if you look at the number of things that the companies, then if you look at the sources of revenue and they're really starting to grow, that's only going to continue growing. And again, I think when this really starts turning into where the sources of revenue are not on things that Tesla builds, but on things that Tesla license as well, that they build and they license to others. And all of a sudden, the sum of the parts is just going to be greater than the core company itself. And I think that's another major catalyst. You have to think of, other companies are studying, Tesla earnings, and they're studying, and that wasn't just an earnings call. There were several updates on the performance of their AI solution and the products that they're building. Other companies have to be looking at that. And they're pursuing their own AI solution, or they may be buying something, or they think they have a partnership with NVIDIA, or, they're trying to build something, and that whatever they build, whatever they're trying to do has some burn rate, whether it's pure R&D or whether it's companies like Cruise that actually have these robotaxis on the road, or Baidu. These companies have an inherent burn rate, and they're all negative. This is what you don't hear others discussing. There's a reason, by the way, that a lot of these earnings haven't been fully broken out into their own division, because they're negative. In some cases, they're very negative. So when you hear about the existence of a product versus you hear on Tesla earnings calls of we're building something that's going to be meant for scale, when they tell you what they're doing on COGS, they're doing that so that the upfront pricing to get in, like the hurdle to get in, is that much smaller. So it's hard to predict. I think it's going to be when we least expect it. But I think what the company did with their earnings is they put a floor under the near term, and they built a bridge to call it the medium term. And it's going to be pretty clear of like, hey, we're growing 20 to 30%. That's a big number. That is a big number. Look at any of the Mag 7. Look at anybody that's building hardware, delivering hardware and services. They tell you they're going to grow 20 to 30% over the next year. And you see what's happening with energy. You're talking about taking a 40 gigawatt hour operation and going to 150, quote unquote, soon. And if you looked at the verbiage in the earnings deck on energy, they changed the verbiage in the earnings deck from production start to shipping start in Q1 of 2025. The gross margins are improving. So I think my key takeaway is floor under where they're at today, and a bridge to the next series of products and the next series, and really the new company.
Okay. So Xander, you've already mentioned your near-term prices. What do you think, near-term stock price movement, what do you think is the great repricing?
I wanted to point something out that I don't hear many talking about, which is the take rate that was mentioned for FSD. If Elon achieves that part, what Jeff was just saying is exactly what my thinking is once you can show that revenue sources are other than just vehicles, there's something that they're doing here that is like the operating leverage. I'll tell you about Menchie's, and you can and we'll get the answer from this repricing, because what'll happen is once I kind of meet the minimum, right? Remember Elon talking about the story of how if it gets really bad, he doesn't care about margins, he cares about moving units. So they just pulled something, right? We saw the bottom last quarter with their EBITDA, and or across the last two, and now you're going to see their operating leverage kick in, where everything is already paid for, but of the amount of all the new revenue that comes in, you are able to pull down much more to the bottom line. I'll give you a specific example. For every dollar in my world, I have the COGS, which is like 25%, and then I have royalties, which is 8%, and then I really have the incremental is the credit card fees, which is like 4-ish%. So once those are taken care of, my labor stays relatively the same. I'm not, there's maybe some maintenance on equipment. So these are the types of things that they're dealing with as well. Every business deals with it. So now for every dollar that comes in, much more of it gets captured to the bottom line, to EBITDA. So that is where this is where the magic happens. If they're able to operate with free cash flow during the toughest time, what happens when, quote, the repricing occurs? So when do I think it happens? I really think we need to see. I think 2026 is a good number, but I want more safety net. So I'm going to be patient here. I don't care about missing the beginning of the wave. What I'm looking for personally is, you saw upgrades, but they're not upgrades. What I want to see is, I want to see Wall Street chase the stock. Once that occurs, the FOMO wave will be huge. So that's the moment that I'll know that, okay, I can go back to being insane with leaps again.
I'm going to stick my neck out. I'm going to say that I'm much more confident that the great repricing could actually happen in 2025. Okay. And the reason is because of the Robotaxi plans, that they were very, very confident in what they are estimating that you'll be able to, FSD will be able to hit safer than a human by Q2 of 2025. That is Ashok. This is the Tesla AI team. They have the internal data. They've been kind of mapping out when they say it's now, this version is 3 times better, 5 times better. Now we're getting here. They actually gave you some numbers. They actually told you that Robotaxi service is actually happening now with actual employees of Tesla in California, that there's a potential city of Palo Alto who came out and announced that they're talking to them, and that they said that it's going to be much easier to get the regulatory approval in Texas, and that they're going to go in scale building Cybercab in 2026, not just producing in 2026, but getting to volume scale. He repeated that twice. Why would you build at scale a vehicle that can't be used for anything else other than Robotaxi, unless they have true confidence it's going to happen in 2025? In 2025, you're going to have the very first, and this is what they announced, that they're going to have the very first paid ride-hail service. Tasha Keeney from ARC said this: Tesla plans to start ride-hail next year and already testing capability in California. This is huge because at the 1010 event, we heard unsupervised FSD next year, but this is the first time they confirmed that this is going to be a paid ride-hail service. Autonomous ride-hail should unlock a 10 trillion plus opportunity. Now, she did then clarify, but Tesla could also choose to launch a supervised ride-hail service if approval takes longer than expected. Elon actually said yes. He kind of confirmed that that's the case. So I mean, I'm feeling confident.
The problem
that just one quick point: the day that they launch a paid autonomous service, even if it's a pilot, and then they're going to show you that there's going to be launched in this state, these cities in this state, these cities in this state. And by the way, he said that there might be a couple other states coming in by the end of 2025. And then you can roll out the roadmap of where this is going to go. At that point, you need to reprice the company to be an autonomous company in the future.
Well, I mean, I hear you, but repricing doesn't mean that Tesla reprices, doesn't mean that us who study the company and know it now for years and understand the business model are repricing it. It means Wall Street is repricing it.
Agreed.
And Wall Street repricing it, I only have a few indicators, but one is Gary Black, who just 3 or 4 days ago said that FSD revenue is not material enough to be considered. So if you remember that, which I reposted and said this is going to age like raw milk, and it is. But the thing is, he speaks for so many others. I mean, let's believe that he speaks for so many others. I have my little doubts, but that's another story. And the other thing you have to understand, for repricing, it's also not in a vacuum. It's a repricing compared to other AI players, right? So you will then have NVIDIA, you will have Meta or Google or whatever else who will have a huge game in AI, and so it will be compared to them, and they may already have revenues, while the FSD part may have not as many revenues yet. So all glory to you if it's 2025. I think we'll all be relieved. We've been waiting now for 2.5 years already, and I don't mind waiting another 2 years. Don't even mind waiting another 5 years because I know it's coming. But hoping that these actors who have been bad actors for the last 2.5 years, who always jump on something they can blow up as negative, now will suddenly see the light.
Right.
Only when the cash is in the books, and they will fight this for much longer than you think. And then the third point I actually only thought of when you showed Tasha's post. while it needs regulatory approval. So while that is all pending, they're gonna hang on that. Oh my God, is it going by county? Is it going by state? Is it going like this? Oh, another one is delaying, whatever. They're gonna love this and write this. So I wouldn't hope for it in 2025 if it comes good enough. But I do believe, I mean, it will come. There's no doubt in my mind. I think the certainty we got yesterday that it will come. But I just want to be careful with timing. I just think, between
And
Elon
to be
being
clear,
overly
I'm not saying 10x. I'm not even saying 2x. I'm just saying that at the point that they do this, you need to start to dollar cost, discount. I mean, discount the future cash flows, right? You got to discount it.
Mm-hmm.
Yeah, you have to start discounting that into today's pricing. Right now, I just did a show where I showed all of the about 4 Tesla analysts, right? Institutional analysts, and they're on going, we fully believe in autonomy. And the guy repeated it 3 times, but 2040, and so they still don't give anything to the value very much at all to the current stock price. If that then becomes a real line item that's actually truly doing it, they may still kind of say, regulatory approval will be 3 years, 4 years. But if you go 10 years out now, you have to bring that into today's
I agree.
price.
I agree. And then there's also, and then there's also the joker of changing of buckets. Remember, we are currently discretionary and we have to go to tech. And I mean, that one will come when the revenue on the service side, on the FSD side, on the software as a service side will exactly become significant. So
it may not though, right? Because my auto revenue keeps going up.
I know, but look at the chart we saw earlier. There's still car the most. There's energy, and energy is still, I mean, it's going to 30%. Remember when I asked that question at the shareholder meeting 23, and Elon said, no, energy will be around 25. Well, now we're at 30, right? And energy is going to explode. We're having 6 billion waiting for us. They're already there. Everything is produced and done, but there's 6 billion waiting because we can't account for them yet. In the next 12 months, there are more than 4.5 that will be accounted for. Not selling a single car anymore. There are already $4.5 billion coming in. So seeing, those things, I think they start understanding. Software as a service, I just don't think they understand it yet.
Yeah, I stand by that. It's going to be a surprise. You're not going to be able to predict it. Yep. And there are going to be announcements. I do think they'll be on the back of partnerships, and I think those will start falling. There'll be some acceleration to them once the first couple happen. And finally, to me, it's just the gall of honestly non-technical analysts, not people that are not technical in terms of AI, in terms of software development, in terms of product. And they're running around and they're showing, spreadsheets from some like random person on X. And here you have the vice president of AI from the leading real world AI company on the earnings call, not Elon, on the earnings call, walking through the 1000x improvement that is in line for this year and their trajectory for the following year, and mapping it to these scaling laws. You have analysts that actually, there are real analysts like Frida, for example, who understand this, and Elon commented on this today. And to me, it's just the gall of some of these analysts who won't actually defer to people that may understand this topic better. And then they go put the biggest thing for me is like they actually go and put their own data out there. It's like they think it's like some sort of like, I don't know, some sort of like DraftKings betting odds of, well, Tesla said it's 2025 in this quarter, I'm going to say it's going to be 2028 or 2035. It actually doesn't pass like when you pressure test any of those comments. Okay, what is what you're saying is actually based on? Well, actually, it's based on nothing. And so you have now, I think the biggest unlock from that earnings call was them going through that data in arrears and going through the projections and linking the two together. I still didn't see a lot of light bulbs go on today, to be honest with you. And quite frankly, that's everyone else's alpha that ultimately does. So I think it's going to be a surprise. I don't think it's going to be 100% obvious in front of us. And I think it'll be swift when it starts happening.
And you are so right, Jeff. You're so right on the partnerships. That's the one thing I'm sort of still missing. Wouldn't have been the ultimate graal yesterday if they would have announced a partnership. So obviously we can wait. We've waited so long. We're going to wait whatever time it takes. But you're completely right. That is going to, remember how that Hertz partnership, which is in retrospect nothing, right, brought the stock up? If there is going to be a significant, because it will also build the acknowledgement of the industry that that's the way to go. There are still people doubting it. There are still people thinking, oh, these gas buzzers are going to, forever be there, and nobody, EVs are not going to take it, and autonomous was dreaming about that. Let's go to Mars, right? That's their line. But you're completely right. The partnership, I completely forgot in my thinking. And if that comes earlier, that may be really one of the major milestones.
Yeah,
To the repricing.
The repricing won't happen. The partnerships won't happen, or more likely will happen once you have solidification of the Robotaxi plans and FSD is truly getting in that direction. And that's why I'm saying that when they do these launch of these cities, at that point, Uber, you're already hearing Uber begging today, but the others will come into play.
Yeah, this is what I was going to point out is, the conventional thinking is you need Wall Street to S&P to reclassify the stock to make it pop. If we're talking about when does the investor get it, I look at the Robotaxi model that's apparently already being tested by employees, right? They're working with the app. As soon as we see what the math looks like, and what the take rate looks like, in what city, how much that happens, the investor's going to move and start buying the stock, right? If you asked me yesterday, would we see 260 today? What probability I would assign to it? It was in the single digits. And we're already here. You're going to see a 270 retest. That's possibly going to happen in the morning. I would have never guessed that. And what happens once you get to 300 and you clear that? Then there's not a lot of people that have invested, maybe back in 2020, but recently. That means that there's no sellers, and then it's a FOMO wave begins. Then you have upgrades, and then so this stock can run, and that's the entire point of why we're bullish. Is that repricing can happen for any reason. A partnership agreement like Hertz was what? Car sales. So that's what Wall Street liked about it. It was 100,000 cars or 50,000, whatever it ended up being. But now the Robotaxi revenue, that's SaaS revenue. That's not the same thing. And once that starts hitting the bottom line, I don't think investors are going to wait for Wall Street to upgrade.
Hey, Herbert, if you put that chart up with the scaling laws again, if you don't mind, I'd have to just want to provide some perspective of what I think is happening in some of these C-suites. And you could say that I'm wrong, and that's fine. You can have your own opinion. I've actually been a C-level exec before, and I've been hauled into various conversations, competitive in nature. What can we do? What are they doing? Why are they able to do this? What's our plan? And so if I'm in the C-suite of one of these companies, let's say I'm the CEO, I want my head of autonomy in a room, and I want to understand, okay, this is what Tesla says they're going to do. First off, this is what here's their report card for the year. Okay. And this is what they said, that you have their car, you're testing it. It's getting progressively better, right? Head nod. And then, okay, well, this is what they say they're going to do. It's going to follow these scaling laws. They're buying this infrastructure, they're installing it, and they have their engineering teams working through this, and this is what they say they're going to do. Now put our lines on this graph and tell me what we're going to do in our company. Show us where we're going to be. Okay. And then I want to also have a graph of the cost structure, both at the inference level, in terms of the actual vehicle, and also at the infrastructure level. Now give me a graph of our cost structure and what would be needed to get to this performance that Tesla is showing. Those are the only two charts I need to see if I'm in the C level. And quite frankly, I'm going to look at this person and say, do you have a plan or not? And part of your plan should be is, if you don't have a plan, then how are you going to form this partnership with Tesla, and what does that deal look like? And then, and what date on the calendar can you bring that deal back to me, where we can have that conversation, understand the economics for the company? Because again, there's a burn rate involved in the work that they're doing themselves. And if that burn rate terminates to zero output in terms of having something viable, and you see what Tesla is doing here, there's going to be FOMO in that portion of it as well. And so this conversation has to be happening. I think, again, this is the first time Tesla went public. You'd be surprised at, where some of this data ultimately gets picked up and where it's used. You think this was common knowledge out there and everybody knew this before the earnings call? Absolutely not. So, we'll see where this goes, but that dynamic is there. It's working in the background. And again, this is something I will continue to call out. I think it's going to happen. The timing is going to be, again, I think somewhat unpredictable, but there's a lead time to do this work. Once you decide that you're going to integrate, look how long it took Tesla to get the Cybertruck running on FSD. And so there's a lead time to do this work. And I just think that intensity meter is growing inside of these companies right now.
Didn't Elon at one point comment, must have been 3 or 6 months ago, that OEMs are slow to implement this if ever there was a partnership, and it would take 3 years for them to was that it? The 3 years? Okay.
Yeah.
Can you imagine? I mean, can you imagine? That means Tesla has this market to themselves, 25, 26, 27.
It's already too late, because even if they do start building cars, how many cars are they going to do? Let's give them 1 million. Wow, you're able to build 1 million cars right away on that 4th year. Well, where's Tesla at that point? 2 to 4 million. They're already, built in every factory in multiple locations.
Yeah.
They're already seeding the place. And by the time they do seed a city with a couple 100,000 and they compete with Tesla, what's the pricing for Tesla? Well, their prices is so low because they've got the cheapest car. Lowest cost car. They got already the scale that they'll beat you if you do a price war with them.
This is true. And this is why I think we're going to talk about that in a second. So I don't want to jump too early, but that's why I think the only way for them to get there is to actually buy the factories. Because
he joked when he said though, Alexandra.
Right?
Said,
I was jumping on my chair.
You can't buy the factory because initially I thought that they would sell them a factory, but they're not going to sell anybody a factory because you can't buy factories. So what can they do?
Well, they're going to sell them the plans for a factory and how to set it up. They will, Jeff. They cannot leave them like that because they're not going to have any competition. They can't do that.
Can they co-pack? Can they just make the product for the competitors and then let them dress it up? Jeff?
That's a shit business.
Okay.
I mean, honestly, just it's very low % gross margin. These contract manufacturers, Magna's in the auto industry, and then of course you have Foxconn, BYD's a contract manufacturer. This is a low margin business. That's not where Tesla's going. So yeah, I don't see that happening. The Chinese are all right. They have the ability to produce hardware, at decent margins. It's not clear that they're producing an EV yet at margins. If they were, they would break it out. They haven't. But anyway, there is capability. This isn't rocket science, but Tesla is so far ahead, and it's so deep and it's so structural in the way they organize their engineering, the way they organize the other components in their company, and the way they design their factories, and then the progressive goals that they put on each product line, which mean like how we're going to get better generationally. So yeah, but they're not. You can't just you can't sell the plants to the factory because the inputs, the ingredients are what's important. You need a culture that drives that part elimination cost structure. It's not just where the machines are in the factory. It's those decisions that lead up to where the machines are in the factory in product design. Even there's decisions that are made at the Franz level about how well this thing can flow through the factory. So Tesla is beautifully connected all of those things together from that point to that point.
I want to show you what he actually did say. He said, all of our vehicles we've made are capable of autonomy. So it's step one. They're already at 7 million autonomous cars out there. And then they're going to start producing 2 million cybercabs 2026 or 2027, and then eventually 4 million. By the time anybody catches up, they're down by 10 million more. Anyways, he says, all our cars are capable of autonomy. We're making 35,000 vehicles a week. Waymo's entire fleet is less than 1,000 cars. This is Elon saying this. All our cars look normal. Now, he said this, Cybercab is a revolution in vehicle manufacturing. The units per hour of the Cybercab line will be something special. Half order of magnitude that other cars manufacturing line, not in the same league. Jeff did a good analysis and he showed you what a half order of magnitude means. If Tesla Shanghai can produce one every 30 seconds, half order magnitude, Jeff, I think you said every 8 seconds, they could be able to spit
9
out a
seconds.
Cybercab.
Yeah.
Then he said, the hardest Tesla product is the factory. You can't reverse engineer a factory. We're rapidly evolving our factory tech. And that's what's going to be, at the end of the day, cost per mile is what matters. So if they can reduce, optimize for autonomy, create this car that's so low cost, have such a low cost per mile, no one can ever catch up. And then you can just reinvent the world. Sorry, Jeff, go ahead.
Yeah, no, this switch to unbox model is not without risk. I just want to let people know, like, this isn't a slam dunk. There are things that they have to work through and solve, and it's not. It changes the approach to construction in the vehicle from the serial process to more of this parallel process. So you really have to look at the labor content comparable to the old model to the new, and then you have to look at the capital content or the capital efficiency per unit produced on the two, and really compare them and make sure you're grinding that down in the new model. Because it's not just about getting that output rate up. It's also like, how did you do it? Like, how much floor space was required to get to 9 seconds? And again, those numbers, those comparisons, I compared it to Tesla's best vehicle today. I think Elon on the call was comparing it to a typical vehicle, another auto manufacturer. So who knows where that number comes in? If they're at 28 seconds today, it's going to be meaningfully south of the 28 seconds. Maybe it's 10 to 15. We'll find out. But honestly, what's really important is what was the labor and capital content, and what's the floor space efficiency to actually enable those numbers. I don't know if Tesla's ever going to reveal that. If they do, that would just be like on their own doing that. But that's going to be the real thing, and you'll see it. It'll come out in the transformation costs of the vehicle. And what that cost is. And they don't necessarily advertise that number, but you would see the COGS take another drop. And by the way, too, it won't happen day one of the unboxed model. They're going to have to scale that up and get it to rate before we see that. So that's why I think the launch of the Cybercab is going to be a little bit unique, where they're going to be building instead of just squirting out a couple thousand cars. I think they're going to be building in the background. And then a huge fleet would be released, and then they would be at that cost structure in the first quarter, or a better cost structure the first quarter release. Finally, just one more thing. The modules to Unboxed are being used in the first half of this coming year. So they're going to come down their cost curve faster. This is significant de-risking of the Unboxed process, because before, the Unboxed process was new modules and new assembly approach for the new modules. Now the new modules would have actually been ramped and used in these prior vehicles. They would come down their cost curve and they would enter Unboxed already at their cost goal. So that is, when I say that Unboxed is not without risk, that was a significant de-risking action that Tesla did.
I got a question for you, Jeff. Okay, so you know how I've been saying, okay, maybe this great repricing might happen in 2025. The reason possibly is because today, as of yesterday's earnings call, they did say that they plan to have a volume production of Cybercabs in 2026. Okay, you're not going to do volume production of Cybercab if you're not ready to do Robotaxi. So if anything changes in the next 6 months, a year, my question for you is, what date, if let's say in the second quarter of 2025, they reiterate that in 2026 they're going to have volume production? You know what I mean? Like at that point, it's unlikely they can come, you know what I mean? Like they're already going to start investing in producing those lines, start producing those cars. to how far forward could they then just change their mind and says, oh, we're not ready, let's push it out?
Well, they could change their mind. This is why I told people about Juniper, for example. Like, don't just because you hear a rumor of it building, starting production in Shanghai, they could find a problem. There's a process to start a factory, and then there's a process to qualify the product in the factory. And so, yeah, they could go all the way up and find a problem, and then have to do some sort of design respin or process respin that could add some period of time from weeks to months. But in general, I would say that that's lower risk. Like, the unbox is not rocket science within itself. What the more the rocket science was, how do you develop an electric motor under $1,000 when your prior benchmarks are $1,500, $1,600, $1,700, $1,800, and so that's where some of the rocket science comes in. The new battery pack and how they get that cost structure down, like that's where so the fact that they've split this up, to me, has made that the launch of that vehicle a little bit lower risk, but it's not zero risk.
So we talked about, which is the key announcements. We talked about the great repricing. We each gave our opinions on that. The Robotaxi Plans, the machine that builds the machine, is really the main product. So end of the day, right? I think it's safe to say that the new book is on its way, because you can't do the new book unless the old book is kind of stable, right? So the stable of the auto business, the margins have improved, the fundamentals improved, the financials have improved, all that is, the factories are there, their plans are there, and now they're free to really show you what they can do in bots, in Robotaxi. Yeah.
Yeah, I want to just say, I think the new book started actually with the big investments in Q2 in the whole AI sector. I think that was much more a starting point than yesterday's earnings call. Of course, yesterday's earnings call gave us details we needed, but if you saw what they put in place, how quickly they put it in place, how Jason Wong clearly defined Tesla as being capable of the impossible in putting this in place so quickly, how that money is now already invested and operational. I think that was the moment when the new book was opened. We're now just, we're still in chapter 1, and there are many chapters to come, but the moment in time, I wouldn't define it as being yesterday's earnings call. I think it was really during Q2 when that decision was taken to just throw all the money into that. That was the moment also when I'm sure they decided that no further gigafactories internationally whatsoever, but that's where we're going to invest. And that's the new book.
Yeah, I thought we saw the cover of the book at the X Takeover, with the Madonna in that interview, and that kind of just planted the seed. And Robotaxi Day is really like that. That is a different company. It's robots and autonomous vehicles. So, what we just saw was financials that can make you go, "Do I want to read that book?"
Nice.
But there's a lot of uncertainty here. But at the same time, I look at, like, what is management doing? Are they making the right decisions? And look, they de-risked going into Fed tightening. They and I don't know if that's CPAs or the not the CPAs, but the chief financial officers. Is it Elon? Who is it? Or is it the entire board that's talking and strategizing? And they continue to make these really smart decisions. And so what does the future look like when you have robots? This is going to get nutty, right? The numbers are going to get extremely attractive. And yeah, I think that the new book is, we're seeing chapter 1. You're seeing what's Elon's thing where he is going to do the 4th version of his plan, master plan.
Mm-hmm.
So that's what you're seeing. It's unwritten. It's not spelled out for you, but if you're paying attention, we're seeing master plan part 4 coming together.
Yeah, there wasn't a lot on the bot, but he did drop a one-liner that, if you're paying attention, is the cheat code, which is, a lot of companies are going to build a humanoid robot, but none of them have the capability, the AI brain that we can build, and the manufacturing capability that Tesla has. And if you just if you don't absorb those statements and really try to study and understand it, and you just throw it away and you just say, well, I saw other humanoid robots, they're built here and they're built there, and they're gonna buy AI from OpenAI, and they're gonna buy chips from NVIDIA, they're gonna stick them together. You're really not studying unit economics. You're really not studying the history of vertical integration, and you really actually forgot what Tesla just did with EV when you do that. So this is a free country. This is a free, and you can do whatever you want. All I'm saying is he gave you the answers to where he sees it, and there's other data behind him that supports what he's saying. That's not just my opinion. I'm Elon. That there's a lot of data that actually supports what he's saying.
Isn't it interesting that there's still people that say that LiDAR is important? Have you seen any robot company with big giant LiDAR heads?
Well,
they don't even make the connection between a LiDAR on a car and a LiDAR in a bot. I don't think. I mean, there is nobody else.
If it works,
did you see that article that Toyota now, as a car company, wants to build bots? I mean, I found that was hilarious. They've done so little on the EV front, so little on the autonomous front, but now they want to jump right into the robot market.
And it just shows you how misunderstood getting to scale is. That throwaway comment from Dara on the Uber podcast of, yeah, these things are getting down to $500 or $600. Why wouldn't you just quote unquote throw one in? And the podcast support's like, yeah, sure, why not? Yeah. Well, when you're building a vehicle that's going to have a $17,000 bill of material, and you want to $17,000 all-in cost, let's say, and you throw something in that's $600, you're a major percentage of the total cost of the product. So that is a major decision. That's a major architectural decision that you would make very early on to design in or out, and in this case, out, because otherwise there's no. That's 3%. That's huge. It's immovable. So it just I found that interesting. And yeah, you're right, Herbert. There's not robots running around with gigantic LiDAR.
Apparently you need it. Apparently it's important.
Oh, you need it.
Yeah.
Safety first.
Apparently it's needed. Yeah. And yeah. Anyway, I found that to be.
Can I add one thing on the short-term price, please? I wrote it down so I don't forget. The Tornetta case in Delaware, we're going to hear that result any day now, could be end of the year, who knows? But there's a high likelihood that it's going to be unfavorable. Okay, and then we'll have to go into appeal, and then there's a plan B, which would be to do something similar in Texas, but that takes more money and more time again. There are a couple of steps prior to that, one being, just recalling so everybody remembers, one being that Tesla had to file, and I hope they did it, I didn't see anything yet, to Delaware, that they have moved out of Delaware to Texas, and that's going to be contentious again. So just saying this, that those headlines will be amplified by all our beloved press, right? Those may be moments where the stock goes down temporarily. They have no impact. There is a plan B, there's a plan C, there's a plan D for this case. Obviously, if plan A would work, that'd be perfect, but I don't expect that. So for people trying to time when to get back in, that may be a moment, because it is insignificant in the big game of Tesla, whatever happens there, but it will be majorly blown out of proportions.
Since you brought up short term, do we ever see below 200 except for exogenous events?
Anything can happen.
What probability do we assign to that? Like 1%, 2%, 5, 10, 20? All right, never mind.
No idea. No option trader. But I mean, I do know that bad events are always blown out of proportions. That's the one thing.
I guess my only comment to that would be, when it fell to 100, what year was that, Xander?
End of
2023? January 2023?
End of 2022. No, end
January.
of 2022.
Which January 2023?
Yeah.
January 3rd was what had happened. Fell the lowest 100. My point is that what a totally different company that Tesla was at that time to this Tesla now. So even if it did fell to 200, the fundamentals, the progress, every product is now ready to be sold. Semi, energy, the bot is about to be sold next year, 2 years from now. The autonomous car is ready. You know what I mean? Everything is already at that level. It just doesn't make sense for it to fall back to 200.
That's funny. I wouldn't say it was a completely different company. It was obviously a younger company because we were all younger 2 years ago. But I don't think it was a completely different company. I think all these seeds were already planted. It obviously took time. It was a difficult economic environment at that very moment, where high interest rates had an impact, where lots of Tesla's car competition gave up. That's the moment they all started to throw it out of the window. So I wouldn't say it was a completely different company. It was just an early stage of what we're seeing now. Obviously, the big move to AI, as explained earlier, that big investment was the real shift, because that was the monetary shift, but you had to produce those 10 billions to be able to put them there, right? You had to grow to this, to do the consequential investment without taking on new debt, right? That's the other thing. Nobody ever is all done on a cash basis. So all that to say, I a little bit disagree with you. It wasn't a different company. It was just a riskier investment. Yet you have all the benefit from it. You invested at 100 and now you're at 260, because you saw early what's going to happen.
Mm-hmm. Okay. Any last comments, guys? No. A little bit of a party there. Thank you for all of us. The bulls. Honestly, we've all gone through so much in the last several years. We saw it pop 20+% today. Maybe it'll go back down, but like we're saying, it's a new book. Like you can kind of see every part of Tesla's business is just improved significantly, and we're hopefully heading into that next wave, next jump up. Now, at one point, there will be a great repricing. I think we all agree. It's just we don't.
Xander, what are you sniffing there?
I was just contemplating, is it time to drink from bottle number 282 of 420? Just because a little sip.
When it closes over 282, you should probably drink from that bottle.
You know what? That's the plan.
No, I say you don't. That's it. You can sniff it today.
I think you should wait for 420.
You should, exactly. All-time high. That's when you drink it. All right. Thanks, everybody.
Isn't it crazy that all-time high is 420?
It will be, yeah. 414.
Yeah.
Now that we've instructed Xander when to drink.
That's right.
All right. We'll all drink. I've got one back there. You guys, we all have one. All right, guys. Thanks, everybody. Bye-bye.
Thanks.
I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.